Real estate investing offers many opportunities to generate wealth by owning or investing in property. Beyond buying a home to live in, there are various strategies to earn money through real estate, including rentals, commercial properties, and investment trusts. Understanding these options can help you build a profitable portfolio. There are two primary types of real estate properties to consider. Residential properties include single-family homes, condominiums, townhouses, and multi-family buildings. These are typically used for living purposes. Commercial properties include office buildings, retail spaces, and industrial warehouses. These properties are used for business activities and can offer different investment benefits. Real estate investment can be direct or indirect. Direct investment means owning physical property where you manage the tenants and the upkeep yourself. You have higher control, but also more responsibility. Indirect investment involves buying shares in real estate through investment trusts or funds, which are professionally managed. This provides a way to earn passive income without hands-on management. Rental properties can generate steady income through tenant rent payments. This method combines ongoing cash flow with the potential for long-term property appreciation. However, it requires managing the property and tenant relations, which includes maintenance, lease agreements, and tenant screening. Real estate investment trusts, or REITs, are companies that own and operate income-producing properties. Investors can buy shares in REITs to earn dividends from rental income and property profits. REITs offer liquidity and diversification and require less capital than buying properties directly, making them accessible to more investors. The fix and flip strategy involves buying properties that need renovation at a lower price, then improving them quickly and selling them for a profit. It requires capital, knowledge of renovations, and understanding the local market. While it carries higher risk, it can yield significant returns if managed well. Real estate crowdfunding allows multiple investors to pool money to finance larger property deals. This approach offers access to diversified real estate investments with a lower minimum investment than traditional property ownership. Typically, these investments are passive, providing periodic returns without day-to-day management. There are many ways to invest in real estate beyond owning your home. Direct investments give you control but require active management, while indirect investments offer ease and diversification. It is important to understand the risks and capital needs of each method and consider diversifying your investments to balance potential profit and risk.
If you like this video, hit that like button and don't forget to subscribe. Visit CodeLucky.com for more such useful content.